Hi, let's discuss how you can account for contingent liabilities, but in the US tax landscape. Why are we discussing the US tax landscape? Well, there are close to 30 million small businesses in US and most of them work on a very tight budget. They can't even afford full-time accountants. It's going to burn a hole in their pockets. Well, the good news is that being an accountant professional, you're already equipped with the core skills. All you need to learn is the US tax landscape and how to network with US based clients. Take, for example, the disclosure of contingent liabilities. This is a cost that the companies may have to pay if a certain event happens or does not happen. It could be patent infringement, copyright infringement, or even environmental liabilities or tax liabilities. So this is the place where accounting and bookkeeping professionals like you handle all of these entries, including the financial records, if the company is likely to pay these amounts. Well, there are a few types of contingent liabilities. Let me take you through a chart. So there could be various types of contingent liabilities, but I've just created this table down to show you what the type of liability could be, what the description is, and what could be the potential scenario when your client could end up paying money, right? So first one is litigation expenses, right? This could be due to potential liabilities arising from lawsuits or claims that happen against the company. Now we're going to put this entry as accrued expense because we are yet to pay it, but it is still accrued. So example has been given that a company is being sued for alleged copyright infringement with a possible outcome requiring a payout if it loses, right? So this is a contingency that we're just being prepared for, and we're creating a specific set of chart to make sure that we have the provision to incur all of these expenses at a later point of time. So example could be guarantees in loans as well, that they may have an obligation to cover a debt commitment if another party defaults. So let's say that a parent company guarantees a loan for the subsidiary and subsidiary fails to pay it back. So the parent company must repay it. Now you must have a provision for this situation. It could be environmental liabilities, right? Where an industrial company is required to clean up pollution caused by operation, incurring costs if mandated. Product warranties, very good example. Now, here, a car manufacturer, if there is a car manufacturer, they may need to recall cars due to safety issues, repair costs for whatever affected vehicles, and tax disputes, right? Let's say that a company goes under audit. So, whatever risk it may owe or additional taxes that it may have to pay based on the audit findings. So, in all of these situations, you see, all of these are situations that have not happened yet, but it may happen, which may lead to the company incurring a loss. Question is, how do you put up all of these entries in the US tax landscape? So I'm going to use a tool called QuickBooks. I'm sure you've heard about it. And don't worry, you can log in to QuickBooks sitting here from India. In fact, you can go ahead and get a 30-day free trial also. We'll teach you how to do that. It's a very simple process, but for now, for this video, I've already logged into QuickBooks. So I'm going to show you how it works. And let's put up the entries for contingent liabilities in QuickBooks. Let's record them. Perfect. So this is how my QuickBooks dashboard is going to look like. And the first thing that I would want to do is to create a chart of the contingent liabilities that we might occur. So I'm going to go on the left-hand side of my screen. You'll be able to see your books. And then in this, you will be able to find transactions. If you scroll down on transactions, you will be able to see chart of accounts. So the first step is to always create a chart of accounts and mention that what is the expected expense to be able to create ledger entries around those. So I'm going to click on chart of accounts. And you will see that there are some default accounts already created. This is done by QuickBooks, but we're not going to use those. And we want to be able to create new charts around this. So what I'm going to do is I'm going to click on new right here. And you'll see that a new account can be created here. So the first entry that I'm going to put is a tax expense, right? Now, this could be a situation where we're anticipating that an audit is happening or there could be a tax liability. So we're preparing in advance for that and we are creating this account called as tax expense. My account type will again go into expenses right here. And my details here could be taxes paid, right? So description is not compulsory. If you want, you can go ahead and put that as well and simply click on save. Okay. So you can see that the tax expense in account type expenses is created. Now to be able to create a provision, I would have to go ahead and create a new chart for that as well. So I'm going to click on new again and I'm going to say provision for tax expense. Okay, this is the account where my amount would go in whatever I'm anticipating that could be my tax liability. We're going to shift this to that account. So for account type, we're again going to go to expenses. We're going to just treat this as taxes paid and we're going to go ahead and click on save. Now, in the same manner, you will be able to see that I have done the same for yeah. If you see, I've done another entry for legal expense right here. This is again expenses. Let's create the provision for legal expenses account as well. So I'm going to type in provision for legal expense. Now, this could be an expense that we're anticipating may happen, or we're in a legal battle already, and we think that, we might have to go ahead and pay out the claim. It could be a copyright infringement case or anything that comes against us, and we're anticipating that this may happen. So we're just creating a provision around this legal expense. It could be an accrued expense as well. So account type, again, I'm going to fix this as an expense that may happen. And here in these drop downs that are available, I can just go ahead. Let me just see. So I can just say legal and professional fees. Okay. Then I'm going to go ahead and save this. So I've already created two types of charts, one for legal expenses that I might accrue and one for taxes paid. Now, if you see, I also have a warranty expense that I have created. And with respect to the warranty expense, there is a provision for warranties that I have also created to be able to shift the money in that account. So in this way, you can go ahead and create charts for whatever contingent liabilities may arise. Now, this could be around guarantees also. Let's say that you're working for a firm where there is a lot of heavy sales, but you give warranties or you go ahead and give guarantees on yearly subscriptions. Now, this could be a business where so with the past data, you must have seen that whatever you're doing, whatever sales you're doing, 2% of that is usually in warranty claims. So you can already go ahead and preserve this amount and put it into this respective account. So all of these are contingent liabilities. You can go ahead and create charts like these on QuickBooks. It's a very simple step. You just go to transactions right here, and you create these in the chart of accounts. Now comes the part where you're actually making the ledger entries, right? So once you've done all of the charts, you have to simply go ahead and click on new on the left side of your screen. And if I click on this, there'll be a lot of options that I would get, right? But our intention here is to create a ledger entry. We want to debit the amount from all of these accounts and credit it to the provision that we've created, okay? So you'll see there is an option for journal entry here. I'm just going to click on this journal entry. Perfect. So let's say that we want to go ahead and reserve the amount for warranties. Okay. Whatever we have done in the chart of accounts is something that will reflect here. So if I just simply type warranty, okay, you can see that a warranty expense automatically appears here. All the expenses that you have created in the chart will actually appear here. Okay. How much debit? So let's just say that this is $1,000. You don't have to write dollars. It will automatically take that up. And credit will be to provision for warranties. You can see this is right here, $1,000. So we can say that provision created for 2% potential claims for warranties, right? And this description is there. If there is a specific customer, which is not there in our case, we are doing this for the bulk, you can put that as well. So there is no customer right now. And once you have done this ledger entry, you can just click on save and new. So it will save this entry and it will take you to a new entry. Okay. Perfect. Let's do another entry. Let's say that we're going to incur a tax expense, and I'm just typing tax here. So you can see a tax expense chart that we created automatically appears here. We're going to say tax expense. Let's say that this is $1,500, and we're going to transfer this to the provision for tax expense, right? So automatic credit will happen. So this is a provision created after tax audit reserving $1,500. You can just write whatever description works your way and why you're doing this and simply click on save and new. Okay, so this is the process to make ledger entries. Let's try the third one. So we have done warranties, we have done tax. Let's say that there is a potential legal expense that we may occur. And let's say this amounts to $3,000. So you put in the entry and you go ahead and put it to provision for legal expense. Provision for legal expense. This will automatically be credited, and you can give out the description potential claim payout due to lawsuit, and you can just give out the entry also if there's an ongoing lawsuit. Okay, and simply click on save on new. Now, let's say that you're doing multiple entries in a day like this, right? There could be various accounts that you're handling and you want to view the ledgers. You want to you want to view the entries at once. So it'll of course show you what number of journal entry you are at for the day, and you'll get the date as well. But let's say that you want to view all the entries that have happened. For example, now when I wanted to check whether I have done the legal and tax and now I'm doing warranty, so I can just click on this, right? It will show me the recent entries that are made. And you can see that these are the amount of journal entries that have been made. So let's just open this one up. And once you click on it, you will see that, okay, there is an entry for legal expense debited to provision for legal expense credit. And the description is that there is a potential claim payout. So in this manner, you can go ahead, record all your ledger entries. And once you're through with this, you can just click on save and new and move forward. So this is a way that you can incorporate all your contingent liabilities using QuickBooks. It's a very easy method. Once I go back, all my chart of accounts will reflect here. Anything that I want to add can be added here, but you can see the balance is also adjusted. For example, my provision for warranty is there. I can go ahead, click on view register as well. And you can see that these are the entries that I have made. So everything will be reflected right here in your dashboard. It's very easy to run. You scroll down, whatever is your whatever entries you've made, they will reflect here. It eases out the work that you have to do, and everything can be viewed here in the dashboard as well. Yeah, this is just one of the ways in which you can log all your expenses into QuickBooks. It's a very easy method to do this. And yeah, if all of these basic standards are not even met in US, they charge huge penalties. So there is a great demand for accounting and bookkeeping professionals in the US. And these people who understand these basics, right? As Indian accounting professionals, you have an advantage because you know all of these basics. I just showed you one, and there is so much more that I can show to you. But understand that companies are looking for accountants who, spot possible risk early for them, handle it well for them. They keep accurate records, one that I showed you right now, and many more such records to handle, the details and the paperwork, share all the important financial details with the auditors and the finance teams, and they're able to catch the red flags, right, at an early point of time to help them prevent all of these potential penalties that they might face. So this is just one way to record contingent liabilities. There could be various entries that you could be storing in QuickBooks. It's a very easy platform, and we can show you many more such skills. Imagine this is just one basic skill that gives you a lot of opportunity to handle accounts for businesses in the US sitting here from India. Well, we are teaching this and 20 more such skills in our free online 9-hour live bootcamp that's happening over the weekend. We're going to teach you amazing skills on how you can tap remote opportunities from India as an accounting and bookkeeping professional for US businesses. The demand is really high and there's a lot of opportunity to tap in. You just need to learn the tax framework and understand how you can tap the market. We'll tell you all about it. I'm Nidhi signing off from this video, but I will definitely see you there, and there's lots more to learn. So bye and see you.